Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to The Deep Dive. It is January 29th, 2026, and today we are looking at a market that is acting very strangely.
It really is.
We have a Federal Reserve meeting that went exactly as everyone predicted, yet the crypto markets are reacting with what looks like, well, panic.
Yeah, we're seeing huge outflows, a big spike in fear, and a really interesting reshuffling of where the money is going.
Exactly. So our mission today is to decode that disconnect. We've got a stack of sources, everything from the latest FOMC transcripts to blockchain analytics and even regulatory papers from the Middle East.
And we're going to unpack why the market is selling the news.
Right, and look at the brutal crackdown that's just crushing privacy coins and this flight to safety that's sending gold tokens soaring.
And we have to talk about the corporate giants. You know, Fidelity, WisdomTree, OKX, they seem to be totally ignoring the retail panic and are just building out the infrastructure for what might be the stablecoin era.
Plus, a trip to Abu Dhabi to see why they're treating crypto miners more like data centers than banks. But let's start here. In the U.S., the Fed meeting. Everyone knew rates were staying put.
That was the consensus, yeah. And that's exactly what happened. Jerome Powell gets on the stream, which, by the way, the fact that major economic policy is now a YouTube event is still a cultural shift I'm getting used to.
I know what you mean.
But the message was consistent. The U.S. economy, it's growing. The job market is stable. But inflation is still sticking above that 2% target.
Right. The official rate holds steady between 3.5 and 3.75%. And Powell used that keyword, uncertainty, basically saying we're not moving until the data forces us to.
Pretty much.
So if nothing really changed, why did Bitcoin drop? Why is the market sentiment index sitting at a score of 37, which is deep in fear territory?
Well, this is where you have to look past the press conference and into the market mechanics. Our sources are highlighting a classic Buy the rumor, sell the news event. But it's a bit more cynical than just that. The data suggests that whales, I know those high net worth individuals and funds, they likely pump the market in the days leading up to the announcement.
So they create this sort of artificial swell of optimism?
Precisely. They create anticipation. Retail investors see green candles, they get excited, they buy in thinking, okay, the Fed is going to pivot or we're going to get some good news.
And then the news drops. It's neutral.
It's neutral. But the whales take that liquidity from the retail buyers and they sell right into it. They exit their positions at a profit, leaving the smaller investors holding the bag as prices start to slide.
And we have hard numbers on this, right? It's not just a theory.
Oh, we do. The ETF outflows are the smoking gun here.
Okay.
In just 24 hours after the announcement, we saw outflows totaling roughly $209.13 million.
Over $200 million exiting in a single day. That is a lot of money to pull off the table.
It's a massive signal. When you see outflows of that size right after a neutral news event, it just confirms that institutional sentiment was looking for an exit. They used the Fed meeting as a door to walk out of, not as a reason to buy more.
That is a tough lesson. I mean, it creates this cognitive dissonance where the news isn't bad, but your portfolio is down.
Exactly.
And speaking of news, there was a really interesting point in our notes about fake news and data literacy.
This is so crucial. One of the sources explicitly warned about the spin we see in mainstream media about these economic reports. The narrative is often politically charged.
Right. Depending on the outlet, inflation is either a triumph of policy or a sign of impending doom.
Exactly. And the advice was pretty stark. Stop reading the interpretation and just read the data.
Go to the primary source.
Go to the Bureau of Labor Statistics website. Read the actual FOMC statement yourself. Treat the media headlines as a filter that, it distorts the signal. If you want to know where the market is actually going, you need the raw numbers, not the editorial.
Because the editorial is usually telling you what happened yesterday, whereas the raw data can help you figure out what might happen tomorrow.
That's it. And if we look at what is happening right now in the altcoin market, we see a really clear divergence. That fear we talked about isn't hitting everyone equally.
No, we have some clear winners and some absolutely devastated losers this week.
We really do.
Let's talk about the losers first, because this feels like a structural shift, not just price volatility. We're talking about privacy coins.
A total bloodbath. Zcash is down nearly 8.7%, trading around $369. Dash is down almost 6%. And this has nothing to do with the Fed. This is regulatory strangulation.
The sources point specifically to India and the UAE here. What's happening on the ground?
Well, governments are closing the loop. India has implemented a heavy ban on privacy coins, and that's following similar moves we already saw in Dubai and the broader UAE.
So the whole thesis is just incompatible.
It is. The thesis of a privacy coin is anonymity, shielding the sender and receiver. The thesis of a modern government is surveillance and taxation. Those two things just can't coexist in the long run.
So as global regulations tighten, which we know is the trend for 2026, the liquidity for these tokens just evaporates.
Exactly. If exchanges can't list them because of compliance rules and you can't easily off-ramp them into fiat, the value proposition just collapses for 99% of investors. It's becoming a forbidden asset class.
But while money is fleeing privacy, it's flooding into something else. And this one surprised me. It's not just going to stablecoins like USDC, it's fleeing to gold.
Tokenized gold, yeah.
Tokenized gold.
This is the flight to safety in the digital age. We have geopolitical tension, we have Fed uncertainty. Historically, you'd buy gold bars.
Yeah.
But in 2026, you buy Pax Gold or Tether Gold. Pax Gold is up 7%, trading over $5,500.
That is a significant move for a commodity that's usually, well, pretty boring. Gold usually just sits there.
It does, but in a digital wrapper, it becomes liquid safety. And it tells us that crypto investors aren't actually leaving the ecosystem. They're scared, yes, but they're not cashing out to dollars and putting it under the mattress.
They're staying on chain.
They're staying on chain, but they're moving their capital into the most stable, historically proven asset available, just in a tokenized form.
So they are basically parking the car in the garage until the storm passes.
Exactly. It's a parking spot. And once Bitcoin stabilizes, or that fear index drops, you'll likely see that money flow right back out of gold tokens into higher growth assets.
And we also saw a huge jump in WorldCoin, right? Up roughly 24%. That seems like an outlier in all this safety talk.
That's the specific utility play. WorldCoin is all tied to identity verification, that proof of personhood idea. In a world of AI deepfakes and digital fraud, the market is betting that verifiable digital identity is going to be a premium commodity.
So you have gold for safety and WorldCoin for utility in an AI world.
It's almost like a barbell strategy. One side is ancient value gold. The other is futuristic utility digital identity.
And everything in the middle, like the speculative privacy coins, just getting crushed.
That's a great way to put it. The middle ground is disappearing. The market is maturing, and it's selecting for either extreme safety or extreme utility.
Okay, speaking of the future, let's pivot to the corporate side. Because while retail is panicking and buying gold tokens, the big institutions are just quietly rolling out infrastructure. The sources are calling 2026 the year of the stablecoin.
It really seems to be. The narrative has shifted from how high can Bitcoin go to how do we integrate blockchain into the plumbing of the global financial system.
Right. We have Fidelity launching the Fidelity Digital Dollar, ticker FID, and we have WisdomTree expanding their tokenized funds to the Solana blockchain. I want to drill down on WisdomTree because this is a fascinating mix of old finance and new tech.
It is. WisdomTree is trying to solve for accessibility. They want to take regulated real-world assets like government treasuries or gold or corporate bonds and make them tradable on a blockchain.
And they have WisdomTree Connect for institutions and WisdomTree Prime for retail users. But they chose Solana for the expansion. Why Solana?
Speed and cost. Simple as that. If you're settling transactions for real-world assets, you can't pay $50 in gas fees on Ethereum every time you move money, and you can't wait 15 minutes for it to finalize.
Wall Street needs speed.
They do. Solana offers that high-frequency trading capability they're used to. It sort of mimics the speed of the NASDAQ, but with the transparency of a blockchain.
However, the source material had a bit of a skeptical edge here. It raised the question, is this actually decentralized? Or is it just, as one note put it, fancy software dressed up in a blockchain costume?
That is the billion-dollar question. And frankly, the answer is probably no. It is not decentralized, not in the way we think of Bitcoin.
How so?
Because you have strict KYC, know your customer. You have compliance layers. Fidelity and WisdomTree can freeze these assets if the government tells them to. They ultimately control the ledger.
The source used a great analogy for this, the mullet of finance.
Yeah, the mullet. Business in the front, party in the back.
Break that down. I think this captures where we are perfectly.
Okay, so the business in the front is the user interface. The onboarding, it looks like a bank. It acts like a bank. It demands your ID, your social security number. It follows all U.S. regulations. It's boring, safe, and compliant.
And the party in the back.
That's the settlement layer. Once you're in the system, the money moves on Solana. It's instant, it's transparent, it's programmable. It uses the technology of crypto without the ideology of crypto.
I see. So you get the efficiency of the blockchain, the 24/7 trading, the instant settlement, but you completely lose the censorship resistance.
Exactly. And there is a risk here, which the sources highlighted. Do you remember the metaverse hype of 2022?
Oh, vividly. Every company suddenly had a chief metaverse officer. I think Walmart even had a metaverse shopping demo.
And most of that just evaporated.
Yeah.
The fear here is that tokenization is becoming the new buzzword. Larry Fink at BlackRock talks about it. So now every financial firm is rushing to slap a tokenized label on their products to catch the wave.
Right.
We have to be critical and ask, are they actually innovating, or are they just rebranding a database to pump their stock price?
That's a key filter for you to use. Just because it says tokenized doesn't mean it's revolutionary. But there is one example in the stack that seems to offer immediate tangible utility, and that's OKX in Europe.
Yes, this is much more practical. OKX launched a debit card linked to MasterCard.
And the big deal here is that it lets you spend stablecoins directly from a self-custody wallet.
That is the holy grail for so many crypto users. Usually, if you want to spend your crypto, you have to move it to an exchange, sell it for euros or dollars, withdraw it to your bank, and then swipe your card. It's a taxable nightmare, and it takes days.
OKX is just cutting out all those middle steps.
Right. You hold your stablecoins, which aren't volatile like Bitcoin, in your own wallet. You swipe the card at a coffee shop. And in the background, OKX handles the conversion instantly.
The specs are impressive too. Works at over 150 locations, supports Apple and Google Pay, and they're offering a 0.4% market spread on the conversion, which is very competitive.
Plus the rewards, up to 20% in crypto rewards. That is aggressive. They are clearly trying to buy market share. But the real innovation is bridging that gap between internet money and buying a sandwich. That has always been the hurdle.
It moves crypto from an asset class you hold to a currency you can actually use?
Precisely. And notice the theme again. This is happening in Europe. The U.S. is getting tokenized funds for institutions, while Europe is getting functional spending tools for retail.
And if we want to see where the regulations are getting really sophisticated, we have to look even further east. We need to talk about Abu Dhabi.
This is a major regulatory pivot. The Abu Dhabi Global Market, the ADGM, they released this consultation paper on crypto mining. And the headline is, they're not calling it a financial service.
Which sounds like a technicality, but that's huge, right?
It is massive. If you classify mining as a financial service, you're regulating it like a bank. You need capital reserves, insurance, massive compliance overhead. It doesn't fit the model. Miners aren't holding customer money. They're securing a network.
So ADGM is classifying it as a licensed commercial activity.
Exactly. They are treating it like a data center, which is what it physically is.
Yeah.
But, and this is the Abu Dhabi twist, they are demanding incredibly high transparency.
Yeah, the list of requirements is intense. Disclose beneficial owners, have a physical security plan for the hardware. And the one that really caught my eye, you have to disclose your specific blockchain wallet addresses.
That's the anti-money laundering piece. They want to know exactly where those block rewards are going. They want to see the flow of funds from the moment the Bitcoin is mined.
But here's the kicker, and this makes it a global story. These rules apply to your global headquarters.
This is the aggressive governance part. If you register your mining company in Abu Dhabi to take advantage of their energy or tax rates, you have to report on your entire operation. If you have a facility in Texas and another in Kazakhstan, ADGM wants the data on those too.
So you can't just use Abu Dhabi as a shell. If you want their stamp of approval, your whole global house has to be clean.
It sets a very high bar. They're effectively saying, we will give you regulatory clarity, which you can't get in the U.S. right now, but the cost is total transparency.
It feels like the region is really leaning into this idea of high-tech governance. We even saw another story out of Saudi Arabia and Bahrain involving IKEA that fits this theme.
Yes, the partnership with high-tech AI. Now, usually when we talk about AI in 2026, we're talking about chatbots or image generators, but this is boring AI.
And we mean boring as a compliment.
Absolutely. This is the stuff that actually improves efficiency. They signed a 3-year deal to digitize HSSC, health, safety, security, and environment.
So instead of a manager walking around an IKEA warehouse in Riyadh with a clipboard, checking if the fire exits are blocked,
the AI is doing it. They're using a cloud-based safe tech platform to analyze incidents in real time across outlets in Riyadh, Jeddah, Medina, and Manama. It's digitizing governance.
Exactly. Just like Abu Dhabi is digitizing the regulation of mining, IKEA is digitizing the regulation of safety. It removes human error and lag time.
It connects back to that broader theme we're seeing in the region.
Yeah.
They are building the infrastructure for a digital-first economy, while other regions are still just arguing about the definitions.
So let's zoom out and synthesize what we've uncovered. It feels like a chaotic week, but there is a logic to it.
There is. You have the Fed maintaining the status quo, which caused short-term pain because the market was over-leveraged on hope.
Right.
Then you have the Wild West of privacy coins being dismantled by regulation. And in response, capital flees to the safety of gold tokens and the utility of stablecoins.
And structurally, we're seeing the emergence of this mullet economy, this hybrid model where Wall Street adopts blockchain tech, but strips away the anonymity, wrapping it in heavy compliance.
It's the maturation of the industry. It's less exciting than the Lambo days of 2021, but it's much more permanent. It's becoming infrastructure.
Which leads us to the big question I want to leave you with today. We talked about wisdom tree, Fidelity, and this whole tokenization trend.
Right.
Here is the thought. Is this inevitable integration, or is it a capture of the industry? If crypto becomes just a back-end settlement layer for BlackRock and Fidelity, and every single transaction is KYC'd and monitored, did crypto win, or did it just get hired by the banks?
That is the tension. Are we democratizing finance or just making the existing financial system more efficient? The answer isn't clear yet, but the Fidelities and wisdom trees of the world are definitely betting on the latter.
Something to chew on while you check your portfolio. And remember our lesson from the top of the show. Don't let the headlines tell you how to feel. Go to the primary data. Read the source.
Verify. Don't just trust.
That's it for this deep dive. We'll see you next time.
Stay curious.